Pretty much evenly, but I think bank interests is probably the biggest growth aspect. Yeah.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, we're going to be discussing and talking about why the next crypto bull market cycle will be extremely different from previous cycles, covering some topics and proving to you all some things that we have discussed in previous video breakdowns, like how in previous market cycles, the infrastructure wasn't ready, how for a fact, financial institutions are currently involved heavily in this space, and they are interested in adopting these cryptocurrencies, utilizing blockchain rails to switch the old, outdated, laggard financial infrastructure over to these new, updated crypto and blockchain rails. With that being said, if you all enjoy these fundamental video breakdowns, showing you guys video clips and information the mainstream media is never going to bring you guys, do us a favor, smash that thumbs up button, subscribe to the platform so that way you don't miss out on any further video breakdowns. It does help boost the YouTube algorithm, and we do appreciate the love and the support. With that being said, we're going to start here with this fundamental piece, and the vast majority of video clips that we're going to share with you all today are from this conference, the CFC St. Moritz. Hopefully I'm pronouncing that correctly. Conference that took place just at the end of last year in 2023. So all of these video breakdowns are updated that I'm going to be showing you guys from within the last couple of months. So let's jump in. And then we're also going to be talking about utility, use case, the XDC network, specifically focusing and dialing our attention on something that Jay just recently won, i.e. the TADS awards, and why they won it. So just capitalizing on some little tiny fundamental highlights from this piece. It says, and again, this is updated from December 21st, 2023, so it is within a couple of months. It goes on to read, institutional investors are transforming crypto markets, not only in depth and liquidity, but in driving financial production innovation that is accessible and more sustainable.
Private bank in the world represented here. And we're going to get some interesting perspectives on where we are today and where we could be in the future when it comes to institutional crypto adoption. So let's start once again with definitions, just like we did in the last panel. Where are we now in terms of adoption of cryptocurrencies on the institutional side? So if I can start with you.
Sure. First of all, I'd like to thank Nicolo and the CFCC board for the opportunity. Where we are now, exciting days, right, with spot Bitcoin ETFs being approved, right? But what we've seen, say, with particularly after the FTX debacle in 2022, right, we really started seeing institutions begin really to move into the space more strongly in 2023. And I think a function of that was that part of the things, say, that the events of 2022 helped shed some light on is that need, say, for risk management and proper tools, right? And at CME, we've seen a very diversified mix of participants. You know, we're seeing hedge funds actively trading. We're seeing money managers in the space, liquidity providers such as some of my colleagues to my right. We're also seeing Bitcoin miners in the space, but we started out actually seeing then banks become more active. And banks have become more active both from a clearing perspective, where banks now clear roughly 25% of cleared Bitcoin futures volume at the exchange. And we're beginning to see now banks actively trade.
Where are these banks that you're referring to? Are these US based? Are they European?
Global banks, certainly seeing a lot of the Canadian banks acting as authorized participants for the ETF products in that country. We're seeing some of the multinational banks, some of the multinationals. We're also seeing, say, Asia-based banks, as well as even Latin American banks active in the space.
As institutional activity in digital asset gains traction, the crypto markets will likely benefit from increased growth and innovation. Where institutions go, mass adoption will follow. I like that one right there. Okay, I'm going to try and get through this quickly to save time this video breakdown. Some may hesitate before exclaiming optimism over recently rising crypto markets. We've recently seen these highs before, short-lived by a market crash and prolonged crypto winter. What have we said to you guys in previous video breakdowns? That the FTX debacle, the collapse of FTX was, in my personal opinion, a implemented PSYOP, okay, in order to give banking institutions that got caught off guard another chance to enter in at discounted prices. And we know for a fact via previous market panelist discussions where they have openly admitted and stated that FTX was a quote-unquote perfect opportunity.
Well, if I may take what you just said on the FTX crash. Basically, for us as a bank, it was just a perfect moment.
Okay, so I'm not making that up. This is coming directly from the mouth of large financial institutions, hedge funds, and asset managers that are telling you guys that FTX was a perfect time to get in. The market was discounted. It was a massive opportunity for discounted prices. However, as the industry begins and it defrosts ahead of what people are coining the crypto spring, Bitcoin has risen at least 120% since the start of the year. Lessons have been learned, and the industry is in a very different place to where it was amid the hype of 2021. The proof is in the pudding. Institutional interest in digital assets has been gradually building.
So, Giovanni, I've got to be honest. That is better news than I thought. That is to say, I wouldn't have thought that in 2024 we've already been this far. Even if it's only 1% of Bitcoin trading volume, there's some big names that we're referring to. Okay, so that's a good snapshot into it. At Wintermeat, of course, you're trading with all sorts of counterparties. Have you seen today? What are the counterparties like? Are the other trading firms? Are you trading against retail? Who are you seeing as your counterparties today?
I would say we definitely have seen rising interest on the institutional side of things compared to 2021, where it was still a lot retail driven. Now like for example, last year we've seen a really massively increased interest in OTC activity. Part of it is due to FTX blowing up and people not necessarily knowing where to trade, like on lead venues. But part of it is, there is interest from all kinds of institutionals. It can be family offices, it can be venture funds, it can be banks, for example. And we see all kinds of institutional actors approaching us and our competitors for prices on OTC.
Culminating in a dramatic increase in investments over the past few months, causing some to reference a crypto renaissance. During the final week of October, institutions poured just under $326 million into digital assets, investment products, mostly into Bitcoin. Again, it says mostly into Bitcoin. There are some other digital asset products that they were investing in. Furthermore, within the past 2 months, Bitcoin institutional investment vehicles witnessed more than $1 billion of new inflows. In addition to an obvious global trend increase in institutional investment, it is also strongly evident in regional crypto markets. For example, in the UAE, more than nearly 70% of digital asset transactions from the past year as of June were comprised of institutional investment. So where are all the naysayers at? It's hilarious that you cannot beat statistics, people. Okay, the people that come into this space on Twitter and on X that say that this market is a fad, it's not going anywhere, it's going away, crypto's dead, don't know how to do research. Okay, that's why it's important, it's imperative that you pay attention to individual pages like ours where we try to tell you guys and show you the information that the mainstream is never going to show you. So what does this reflect? It reflects the portfolio of interest of not only organizations, but also high net worth individuals who are highly concentrated in the jurisdiction. Now, it goes on to say, now that regulation is being driven as a priority, market conditions are beginning to reach the standard institutions have come to expect. We've told you guys in previous video breakdowns, there's massive institutions sitting on the sidelines, simply just waiting for regulatory clarity before they onboard massive amounts of money into this space.
And top banks are definitely very well aware about what is happening, what are the new options. But indeed, given the complexity of the organization, they need a bit more time.
You're going to look back, you're going to wish, dang, I should have got in before the financial institutions did. Because once they do, just like in the stock market back in the early days, you are not going to be able to buy these digital assets for such a cheap price once the market makers, i.e. the financial institutions, come in and drive these prices higher. Over the past year, crypto hubs across the globe have begun defining and enforcing their own regulatory frameworks, but it is only the first step, so we still are in the early stages. Importantly, institutional investors, in order to remain active in the market, relies on the proactive regulation that is coming into force in key markets. Mike, in Europe, the UK's FCA marketing guidelines and digital asset regulatory frameworks from the CFC and FSRA in Hong Kong and Abu Dhabi respectively provide institutional investors with reassurance and ground rules that they need to operate at a sustainable level. These crypto regulatory frameworks ultimately better inform and provide the regulatory clarity that institutional investors require to efficiently operate. And we know that that time is coming. It's only going to start to get closer and closer and closer, and more people are going to start to FOMO in and FOMO in. Again, situate yourselves and your portfolios accordingly, not financial advice. Last but not least, it does say the institutionalization of the crypto industry is upon us.
So it's not just banks growing their interest or family offices growing their interest, or I don't know, sometimes we work with foundations on DeFi side of things. It's basically growing across the board. Like there is definitely interest growing pretty much evenly. But I think bank interests is probably the biggest growth aspect. Yeah. But I think bank interests is probably the biggest growth aspect. Yeah.
I'll end the fundamental piece right there. Now let's get into this piece. This is very interesting because what have we been attempting to give you guys information on over the past like 2.5 years, I'd say that we've really been covering these topics heavily. Okay, ever since the collapse of FTX and ever since the bear market started back in 2021, we've been telling you all to dial in on utility and use case, that eventually we will reach a turning point in this market where speculative day trading will still exist, but the shift towards meme coins and hype NFTs and all these bullcrap projects will shift into utility and use case.
And so I think that the speculative wave that we have seen surrounding crypto is hopefully coming to an end. And what we're going to see is finally the opportunity for crypto to prove itself as an application that makes sense and solves business problems and adds value and provides a good customer experience.
What can you advise to the people in the room to what are best practices here?
I think it will be use case driven. So I think there will be asset classes where legacy infrastructure will just continue to function as well as it does right now and will just continue to be used. And only those will survive, and only those will be able to, introduce new forms of trading, new forms of capital markets infrastructure that still have the customer and the trader in mind.
I think of the many things that we hear about crypto space and new technologies, it's always a lot about, hyping a coin, hyping a new chain, hyping something that technologically might be truly, magic, but at the same time, it's important to actually hype the use case, and that's going to be the theme of what I think is most relevant, because
world of tokenization, and I think still there is a kind of crypto winter, but the smart guys are now looking what to do next and to use the time where the hype is going on, but it has slowed down to some extent. But the smart guys are really looking for the use cases, preparing them.
You suddenly have solutions. When you start looking at it from this new world and don't think about migrating old to new, but think of a new solution on the new world, you begin to see possibilities. And what's the use case, you would ask? I mean, yeah, we've got LCs, and we're going to change all our systems? No. The use case is deep geofinance. And
so what we conclude in the report is that the near-term engagement by financial participants, financial market participants, is not about the right public or private blockchain. It's about the right business network ecosystem and use case to gain experience and develop assets that will lead to accelerated adoption as the market matures, and doing so in a regulatory permissible way.
Okay, and here we can see the 4th annual TADS Awards 2023 took place. Now, we have some interesting winners here, but what I want to focus your attention on is projects and cryptocurrency assets that we've talked about in previous video breakdowns, i.e. XDC and the XDC network, okay? Here you can see some major partners of this organization. So, it's obviously, of course, something that you should be paying attention to. We have individual participants like Microsoft, IBM, okay? We know how big players they are, Accenture, Deloitte, DLA Piper, right? That's a Hedera partner right there, okay? I mean, it's just absolutely massive, the interconnected webs that are being created. But right down here, it goes on to say that if you look at the Web3 Innovations Awards for the TADS Awards winners, you can see that XDC Network was listed. Now, I want to scroll right down here where it goes on to give the reasons, their judging criteria as to why these particular organizations won said award, okay? So you can see that in the category Web3 Innovations, XDC Network is listed. You can see the judging criteria: Best of Class TAD Ecosystem Excellence, Web3 Innovations, and Student Award, with different judging criteria and judging panels that are customized to each award category. So if we scroll right down here to the category where XDC won in, right? Remember, I've told you guys to focus on utility and use cases because that's what the financial institutions, the smart players, are going to be doing, okay? Just because price action is not moving now does not mean that in the future it won't, okay? Once financial institutions come into this space, they have legal and regulatory clarity, and all of the ones that were interested doing their research, building the infrastructure, building the back-end system so that way they can successfully onboard themselves into this space, when that time comes, you're going to see a lot of people's jaws drop. You're going to see a lot of people's faces melted because they did not prepare. They did not do the research. They're going to be like, how did I miss out on this opportunity? Why am I buying XDC now at $1+ when A couple of years ago, it was only 4 cents. Okay. Take that into consideration. I cannot stress enough. Again, not financial advice. And I'm not telling you guys that XTC is for a fact going to go to $1, but in my personal opinion, it is very undervalued compared to where it's at in price action today. So here you can see why they won. It says added value. Users today are more discerning, more critical, and look to projects that offer real added value. Innovation, non-obvious synthesis of application ideas, technologies, expertise, and domain to produce true innovation. Future utility. Sustainability is important, and to be sustainable, a project should have long-term viability, wide applicability, and not become obsolete quickly. Again, remember, XDC Network won this award, particularly in the Web3 innovation section, and you can see the judging criteria that they met and won in. You can see that future utility, novelty. I like this one. How the projects apply technology creatively, utilizing the unique aspect of TADS to create something new and original. And then last but not least, governance, protecting members, customers. That's important, right? So obviously, of course, potential stable infrastructure, trustworthiness within the XDC network, stakeholders as well as ensuring compliance to existing and emerging regulations has taken on new urgency and is fundamental. So they are compliant with emerging regulations and already pre-existing regulations. And remember, in the previous CFC fundamental piece that we read, how we ended it was confirming that financial institutions are looking for, again, regulatory clarity, and that regulatory clarity is coming. Okay? So just keep those things in mind. Now let's get into the video clips. Again, I just wanted to share these fundamental pieces with you guys, confirming some things that we've talked about in previous video breakdowns. Now, all of these video clips that we're going to confirm today are going to show you all that, remember, we've told you guys that banks know for a fact what is coming. If you think that they don't, then that is just ignorant on your behalf. You have to understand that these financial institutions, they're hiring crypto native representatives that work at these blockchain companies and these crypto native companies to come and work for their organizations. They know exactly what is about to happen. Okay. They will move over to crypto and blockchain rails in the near future.
So my background is traditional financial services, and at 1KX I'm focused on institutions. And what I think is really interesting, also when I first started working in the internet in the early 90s, it was actually to build intranets for companies. And then of course everyone later moved to the internet. And I feel like we were in a similar space with blockchains, with institutions, where we were very much using permission chains. And now institutions are realizing that actually they want to build on public blockchains. There are,
because they see this and they say, oh, the crypto rails are actually better for trading these traditional assets than the current rails that we have. So we're going to move over slowly.
If they don't, they will fall behind. They will be obsolete. Okay. And they know that. Banks are for a fact involved now. Now, obviously, of course, it's a very small percentage of banks that are willing to take on the risk, but there is for a fact a large interest in financial institutions in the now. Then we're going to capitalize on the focus and how it will shift towards use case and utility, and how in previous video breakdowns we've mentioned that. And then the last two things is that blockchain and cryptocurrency, we've mentioned in previous video breakdowns, will eventually become obsolete to the normal everyday average person. Just like how the normal person has a debit card or credit card, they go up to Starbucks or whatever fast food restaurant they like to eat at, okay? They swipe their card, the payment is processed. They don't know the back end system and how that payment was processed. They just know that they hand the merchant their card, the merchant swipes their card, and then the person hands them their food through the drive-through window, and then they're on and off their way.
Tell me about what you're most excited when it comes to use cases and applications, because ultimately we're building all this so billions of people can use this technology in the future. So curious what you're thinking about when it comes to applications.
From the talent side of things, where people are like more interested in coming to the space and building real solutions for end users, coupled with rollups, account abstraction, other improvements we'll see this year. I think there are a ton of use cases that we've been talking about for a really long time, It's from like 2017 ICOs that will finally come to market in the near future. And hopefully people will be interacting on chain without necessarily knowing that they're using crypto at all.
That's great.
Publicly open source blockchain, or even supply chain management, and of course there's DeFi as well. So I think when there's more use cases that use the blockchain technology and the technology gets more scalable, that's how we get mass adoption. And it's also just a matter of time, people learning about it. Adoption always takes a bit of time.
Yeah.
Okay, they don't care about how the payment is processed. Eventually, blockchain, digital assets, cryptocurrency will all be seamlessly integrated into the backend infrastructure. People won't even know that it exists, right? Obviously, of course, there will still be an aspect of speculative trading, right? But just like how the vast majority of individuals don't trade the stock market, albeit yes, there's a large portion of the population that does, not everybody in the world is going to be interested in crypto. Not everybody in the world is going to be interested in trading or holding these digital assets. But in the near future, these payment rails will run on blockchain and cryptocurrency.
To that point that things may not be in the financial world, and the basis that 2 of the 4 panelists are from technology companies and not from financial companies. So I think tokenization is very much, you will see a shift away from the financial world in the TradFi kind of inverted commas, if you like, to be much more technology orientated.
So I mean, to go back to the original question of the panel, you think that, yeah, where does that answer sit in relation to the question of the panel, I suppose, when we're moving away from traditional finance?
Yeah, traditional finance will move towards crypto, and not the other way around.
And so what is the value of DeFi today relative to what people perceived the value of DeFi might have been 3 years ago? Well, the value is that it's actually easier and faster and better to build financial products on a DeFi stack than it is to build it on the old traditional financial stack that was built over the last 50 years. And that's why you're seeing major banks, major PBs start to build things like tokenized money market funds. Because they see this and they say, oh, the crypto rails are actually better for trading these traditional assets than the current rails that we have. So we're going to move over slowly.
So regardless if they're interested or not, they will still be using it because it will be integrated into the backend infrastructure. And that's exactly what we've been trying to tell you guys, and exactly what will be confirmed by reputable individuals that have many more credentials than myself. And then last but not least, we're going to hear a gentleman go on to confirm how in previous market cycles, right, the infrastructure was not ready. Again, go back and rewatch our infrastructure playlist on the CYPRX platform, where we cover this in detail so you guys can be updated and informed on what we're talking about. So to full circle this, once that gentleman finishes off the video clip with that, that is exactly why the next crypto bull run will be different. Regulations are coming. Institutions are here, okay? The infrastructure to handle large amounts of volume and volatility is ready for these financial institutions. Buckle your seatbelts, ladies and gentlemen, because it is about to get absolutely massive over the next couple of years. I hope that it happens shortly within the next year. But again, I've always had a long-term perspective, and I have a firm belief that everybody participated in this space should as well, given the fact that it is not even 6,000 days old yet. With that being said, do us a favor, smash that thumbs up button and subscribe to the platform before you head off here. Share these video breakdowns. We do appreciate the love and support.
It's going to be a bigger network. And I definitely see this year as coming big of the big consumer use cases that were not possible before, just because the infrastructure of user experience was not ready.